Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my medium time frame bearish scenario where we're expecting a three-wave structure to the downside in a WXY, currently being inside wave X, which by itself is a three-wave structure, and then an ABC expanding flat. The most common target for wave B in an expanding flat is the 1.236 to the 1.38, pulled from the low of W to the high of A, which as you can see on the 4 hour has been very nicely respected indeed. Only a couple of wicks below, but that is no problem. The candles are closing inside this area, which is exactly what you want to see. Now, a rare target for wave B is the 1.618, but of course we prefer that one not to be hit. Also in confluence with the 1.38, we had the yellow target box over here, and price wicked inside this yellow target box against the daily naked point of control and the weekly naked point of control that we had at about 24.8k for some additional support in this area. And we would be looking after this range over here inside this area for a wave C to the upside, which then is a 5-wave structure. So we then have a 5-wave move to the upside, where the common target for wave C is this white box between 28.9k and 30.4k. Now this is an interesting area, first of all, because at 29.3k we have the point of control, the red line of this wave W over here, and we also have a triple top at 30k, which is very attractive for maybe a liquidity grab and then a continuation to the downside. Now inside this white target box we then have two blue resistance areas, the first one between 28.9k and 29.2k, and the second one higher up between 30.2k and 30.5k. And what I like about this scenario, which also I start to feel it's almost like my preferred scenario at the moment, is that if we are going to create a 5-wave move towards the upside, people might think we're going to be in a very bullish market structure again, like a new impulsive structure for much higher prices, taking the high of 31k, but instead it's going to be a wave X liquidity grab at the triple top and then continuing to the downside for a wave Y. There's another reason why I like this scenario as well, which actually has to do with the lower time frame scenario, and especially this move over here, but more about that in the bullish scenario, which is the one we're going to right now. So this bullish scenario is a three-wave structure as well in a WXY, but then wave X is already finished, and this structure to the downside is part of wave Y. Now, the reason that I just mentioned that the other scenario might start to feel more as a preferred scenario is because of this move over here as mentioned, because in this structure to the downside in a wave Y, we are then looking for a three-wave move, where over here one could be looking for a zigzag or at least a three-wave move to the downside. Then we have a move up, and now we're in the second leg of a wave Y. So it's a 1, 2, 3-wave move to the downside in wave Y, which is what you want to see. But the main issue is that this move to the upside is very short. It is shorter than the 0.236 FIB time taken from the high of X to the low over here, which is incredibly short for a wave in relationship to the previous wave. Like usually you want to see waves at least past the 0.382 FIB time, and if I take the FIB time from the high of X to the low of this red candle and I put it on white, enter the 0.236 over here instead of the 382, so the 236, you will see that the high has been made before this white line, and that's actually not something that I really like to see. Is it possible? Yes, of course, it's possible, but probability wise, this is not a great like wave X and potentially a WX and then a wave Y, and I would prefer to see either a longer wave X, something like this, which also means then again we're going to first have a move towards the upside, but instead of going for the higher prices I just mentioned, this double top is going to be very interesting at 27.5k, 27.4k, for then potentially a reversal, which then means that this can be a W. Then we have a three-wave X, and then eventually we get a Y to the downside, where then this wave X locally is again going to be an expanding flat. And as you can see, also this one with the targets of the expanding flat has been very nicely respected. Again, we're inside this area over here. Price touched this area. We still have a little bit of room in this particular scenario, but then still we're expecting this to be a W, three-wave in an X, and then a Y, and this three-wave in an X is then an A, B, and then you again expect an impulsive move to the upside in wave C, where then the double top is a very interesting target in this area. So if price is going to move towards the upside, this is definitely an area of interest, and yeah, we have to wait and see what price then is going to do. If we then go to the low time frame scenario, I'm going to switch to the 2-hour time frame over here, and the 2-hour time frame, what we're looking at is that WXY as I've just explained. So this is the bullish scenario where X is already in. in this area of interest for wave Y, we then expect a bounce. So the wave Y target area is between the 0.618 and the 1.236, which is between 25.2K and 24K. And as you can see, price is inside this area. Now we still have enough room for downside, as you can see, in this particular scenario. And if we look at the target area, the yellow box, you can also see that the yellow box is in confluence with this target area for the wave Ys. So the target box from 24.850 to 24.3K has still some more confluences in this area, and one in particular is all the way at the low over here, which I'll show in a micro scenario. So we still have a little bit of room for potential downside in this scenario. But if you look at the channel, what is interesting about this channel is that price has been respecting this channel very, very nicely indeed, where the channel is pulled from the high of this X to the high of this white X over here to then the low of W. And you can see that price moved to the downside and finds respect and support at the lower end of this channel, which is actually very nice indeed. But we'll go to the micro in a second, because the move to the downside might not yet be finished, right? So in this particular scenario, the low of the channel is very, very nice. And what is important, by the way, about the channel is that if this is potentially a bearish scenario, much more bearish scenario than an impulsive structure to the downside, and I don't have any scenarios for that, but then you want to see the channel line being broken impulsively. But as it stands now, it's nicely respected, which gives a higher probability to this move to the downside being a corrective structure, like a sideways structure, and not an impulsive structure to the downside. So that's a little bit of like information with channels and Elliott waves. If we then go to the micro scenario, I'm going to switch to the 30-minute time frame over here, and you can now see that I also added the other confluences that are still in the yellow target box. So you can see a time naked point of control at 24.7K, and we have a daily at 24.3K, which is at the lower end of the yellow target box. Now in this particular scenario, we have a high over here, which was very nice indeed. This high wicked inside that target box that we had over here during the news. Price moved down, started ranging. Eventually we had another news wick. As expected, price taking this little high over here, as mentioned in a couple of videos, expecting to move up, taking that high, then moving to the downside, finding support at this yellow target box. Now this can be counted as a 5-wave structure to the downside in a wave 1, 2, 3, ranging eventually in a 4 or 3 might end actually over here, because we could have an inner 1, 2, then a 3, 4, 5 type of move. So wave 3 might actually end over here, then a sideways 4 like a range, and eventually a wave 5 to the downside. Now wave 2 hit the 0.5 Fibonacci, taken from the high of 1 to the low of wave 1, which is one of the common targets for wave 2, which is nice. Then this wave 3, or at least this impulsive structure to the downside, hit the 1.618, which is pulled from the high of 1 to the low of 1 to the high of 2, which is a common target for a wave 3 and a rare target for a wave C. And that's the reason why currently the probabilities are higher for this move to be a wave 3, expecting eventually a bit more downside, because then this is still part of like a wave 4, and then we expect a wave 5 to the downside for then eventually a move towards the upside. Now if we then look at a wave 4, then the wave 4 Fibonacci's over here pulled from the high of wave 2 to then the low. I took this one at the moment, but either or, low of wave 3, and you get these fibs on your chart. Now the 0.5 is a maximum target for wave 4. You usually don't want to see candles close above the 0.5 Fibonacci. The 382 is a common target for 4 as well as the 0.5 actually, but this is the maximum target. So the invalidation I have is currently at 25.5K. And if price is going to reach this area, we could still be very much in a wave 4. And what's interesting about the 0.5 Fibonacci is over here is that if I pull a little bit of a box over here, then you can see that the 0.5 is actually in confluence with basically a support resistance area. So resistance over here could turn potentially in this wave 4 into resistance at whatever is going to happen. Maybe we're going to take the low again. Maybe we're going to move to the upside. Whatever the range is going to do, potentially we might reach that 0.5, but then know that it is also a resistance area in a potential support resistance flip over here for extra confluence around that 0.5 fib. Now, after a wave 4, you then expect another impulsive structure to the downside in a wave 5. And if we just estimate a little bit about what's happening, if either of these lows is the low of potentially wave 3, I'm going to pick the left one over here for now, or maybe we're going to make a new low, but just click over here. let's say it's going to go to the 0.5 Fibonacci. Then I put on the most common wave 5 target, which is the 1.236 to the 1.618. And you can see now that the target area for potential wave 5 is in confluence with that daily over here at 24.4K, 24.3K. So that is very interesting. So we could actually range on top of this box, then move to the downside of the box, maybe wick below shortly, but hit that daily before then a move towards the upside. If we then finally look at the CVD divergences, we go to the AGGR chart over here, and you will see over here that we do have some bullish divergences, one can say. Let's go to the 5-minute here to make it more clear. So you have a higher low in price, but on the blue line, lower low on the CVD. However, this is not a clean CVD. And I explained in the silver group as well, the silver members, that this is not a clean CVD. It can play out, yes, absolutely. And we do have a bullish CVD divergences. But what happened is here price started to move to the downside. And you can see that the yellow line started to make higher highs, lower highs on price, higher highs on the CVD. There was absorption going on over here for price pushing to the downside. Now, the cleanest setup that you can get in a CVD divergence setup is in the bullish scenario over here, creating a high, a retracement, bullish divergence, or a higher low on price and a lower low on the CVD, but then without any bearish CVDs in between this move up and the move down. So completely clean of bearish CVDs, only seeing bullish CVD structures. But over here we created some bearish ones, so it's not completely clean. But of course there is still a bullish divergence over here. And if we actually zoom in, do we take this high with the CVD? No, not. You could say we might have some bearish divergences again on the yellow line, price pushing here to the upside. But hey, we have to wait and see, of course, what's going to happen on these very low time frames. I prefer to use CVD on the 15 myself over here. And on the 15, you can see we do have bullish divergences, but then again, we had some bearish divergences very, very locally. And I'll do it in the beginning of my next video. But for the people that are still watching, I am very, very proud to announce to you guys that I have published and opened the CVD one-pager. So hereby I share my CVD one-pager to you all. I hope it will be useful for your learning and your trading. And I'd like to thank you for, of course, being part of the community on YouTube, Discord, Telegram, wherever. And this is a CVD one-pager that I designed. I'll make sure to mention it in the morning at the beginning of my video tomorrow so everyone actually sees it. But yeah, this I think is very, very useful. You can download it here in Discord. So you can just join, link in the description. Check out the CVD one-pager. And if you want to know where I trade with CVD, the link over here is also the AGG website, and my template for the CVD divergences is also over here. So make sure to check that out. Now, I hope this video was helpful or valuable to you. Please check out the memberships and most recent educational video I've made about the best trading indicator, in my opinion, which is the CVD. So for now, thanks for watching and subscribing, and I'll see you at the next one. Bye-bye.